Horvat, and I will just give you a free update here on the market that I'm tracking. Now I'm looking at the euro dollar here on the 4-hour chart. We can see that the price actually recently turned down. Now it fell beneath Friday's low. We are also breaking this important trend line shown on the 4-hour chart, which makes me think that we could see lower levels. So I'm just curious to see how this trend line will react here. If we will hold as a resistance, then this could be some series of 1-2s to the downside. So watch out for 106.20. Fall beneath this level would indicate that correction is finished. Why? Because this would actually be the first time that a higher swing low would be taken out. You can see here that we have plenty of swing lows since start of January, but now if one of these swing lows will be broken, then I think that we should be headed lower. The reason why I think that euro dollar could see more weakness is shown here, actually still on a monthly chart. No question, there's still a downtrend in full progress. And what I see here is a wave 5. Now wave 5 already reached a new low in January, but if this was wave 1 of C, then you know that wave 5 could be similar to wave 1, or at least 61.8% of wave 1 measured from end of wave 4. So if we respect some guidelines here and rules as well, then I just think that this is not enough for wave 5. Okay, so actually either is this start of this wave 5 that will take us to lower levels towards parity and then bounce in the second part of this year, or is this maybe part of even more complex wave 4? Let's assume that wave 4 can still be unfolding. Okay, so actually in both cases I think that euro weakness is not done yet and that we will see more downside. Okay, so for the short term especially, as I said, this 106.20 level should be very important. If we'll see a break above the trend line, if we'll travel back above the trend line, then watch out for this resistance to be tested at the former wave 4. I think this is last but probably the most important resistance that could cause a reversal later this week. Then the main idea for dollar bullish view is also dollar yen pair. Clearly we have a very nice structure here on a daily chart. There's wave 1, 2, another wave 1, 2, and then you have clearly a very strong move to the upside. This must be an extended third wave, which fits nicely into even more extended third wave that can be unfolding here. So actually this pose is just a temporary. Normally, as you know, wave 4 will retrace back to the area of a former wave 4, which I believe was here, and also 38.2% is the one level that fib level that you should also be aware of. The next thing is that notice that there were a lot of swing points here around this area 112. So actually here was a support, and we break lower, and these same levels turned into resistance that were tested for 2 times in a row, and then finally we have seen a very strong move to the downside. Now here you have seen a breakout above this same level and then small reversal here back in let me draw this one again, here back in at the start of December or so. Then we have seen a push to the upside, and now again we are at this same level. So if you consider fib level, former wave 4, and this bullish trend, which suggests that we are now in just a setback of wave 4 within larger degree wave 3, then we really should be aware of a potential turn to the upside. Now not only this, we also have some strong signs of a corrective or contrary movement here on the 4-hour chart. There's no way to count this in impulsive fashion because, as you know, only impulses can confirm a changing trend. So if this would be a clear 5-wave fall, okay, from a top, then I would say that we have a high in place here. Okay, if you see something like this, an overlapping moves, okay, then clearly to me this is just a slow move. Bears are not so strong, volume is very low, so normally this indicates that we are in a corrective phase, so then you can expect a resumption of an uptrend. And clearly this is what I'm tracking here. I see ABC in W, then we had a running triangle for wave X. Now running triangle, as you know, is structured also by 5 waves, but wave B moves into a new extreme, which means beneath the starting point of wave A, which was here. So still a sideways price move, okay, and then you had another 3-wave drop. And what really matters to me the most within this structure, and which tells me that we could see a reversal to the other side, is actually this ending diagonal. Okay, ending diagonal, as you know, is a final pattern within larger trend. So in our case, larger trend was here to the downside. Okay, it's a correction, so ending diagonal can occur in wave C or a 5th wave position, and here we see it in a wave C of second zigzag. So ideally we will see now price turning higher and breaking above this upper resistance line of this ending diagonal, which can then make a very strong run to the upside. Now normally when ending diagonal is really finished, you will see a reversal of the price back to the start point of an ending diagonal. That's normally minimum expectation, and this was here. Okay, 115.60 level. So actually there is strong or big upside potential, okay, if we see this breakout. So actually there are a lot of traders that turned bearish on dollar after this recent reversal down on dollar index, but I just think that there can be too many traders that are trying to call a top of the dollar, but that's usually not a good thing. You know, catching the top, especially on the larger, bigger cycles, is a very difficult thing to do. So it's much easier, I guess, to stay with the trend and focus on these pullbacks as part of an ongoing move. Okay, okay, traders, so thank you very much for your attention. If you're not our member yet, then please check our free trial that we offer it for 14 days for only €1. You can go to wew-forecast.com and check what we have to offer. Okay, so if you have any question, just contact me on Twitter or send me an email. Okay, have a good day. Bye.